Welcome to Zen and the Art of Real Estate Investing. What if you could learn from experienced real estate investors, find out what got them to where they are now, get insight into their daily habits, and take these insights to inspire your own growth? Each week, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor, advisor, and coach, as well as the founder and team leader of Streamlined Properties. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, Jonathan seeks to provide a free mentorship program you can take with you anywhere. Now, here's Jonathan.
Thanks for downloading the episode and getting ready to listen to episode 182. This is a solo episode with just me. I solicited feedback and got good feedback that maybe it would help to mix in a solo episode every 10 or so. So here we are again. I did it at 172, and today I'm doing it again. We're going to talk all about analysis paralysis and what I think about it right now. This is episode 182 of Zen and the Art of Real Estate Investing with myself. It's me again because I got great feedback on episode 172, which was the last solo episode. So 10 episodes later, I'm coming at it again. So this is a solo episode with me. I'm probably going to try to mix these in about every 10 episodes so you can get a deep dive of some of the things that I'm thinking about, speaking about, talking about, or that I think are really relevant in the journey of becoming a mindful real estate investor. As you know by now, 182 episodes in, this podcast is about the mindful approach to real estate investing, and that encompasses my journey really as a person and as a real estate investor from growing up as a toddler walking houses to now still doing the same thing. So this episode is about analysis paralysis because it's one of the biggest things that I read about on Bigger Pockets and the forums and everywhere. And I think I hear people talk about it all the time, but I'm here to tell you that analysis paralysis is not real. If you think it's real, I'm going to tell you how to overcome it, but it's not a real thing. The reason why people are stuck in analysis paralysis is because they lack the confidence to move forward. So the paralysis actually isn't because of the analysis. You're doing analysis as a procrastination technique so you don't have to make a decision because you can't make a decision because you haven't built up the reps or the confidence in order to make a decision. How do I know this? Well, if you didn't know, I'm actually a certified life coach, and not one that got it in a back alley or some certificate online. It was at least 30 weeks, if not more, maybe 36 weeks. And I did it in a year that I dropped real estate altogether about 7 or 8 years ago. I needed a break. I needed to go inward. And during that year, I got certified. And I thought about putting it in practice. And instead, I really put it to practice in my family life, my personal life, and now in my business. So that's been a big part of my journey as well. It led me to a lot of mindfulness techniques that I carry along. And that's why I can look, I guess, with a bird's eye view at what analysis paralysis is. So I'm also a writer. And as a writer, I used to have a lot of people tell me like, oh, I have writer's block. And I would say, well, writer's block is also not real. And the reason why writer's block is not real is because you can still write. You can just literally write anything that comes into your mind for an hour and you would be writing. So you don't really have writer's block. You're lacking a confident part of moving forward in your story. Probably don't feel good about it. Sometimes you're not motivated. So those things are a little bit different, but it's the same principle. Analysis paralysis for real estate investors is fake. It's just procrastination. And the reason why you're using spreadsheets and analysis tools and vetting deals that you haven't looked at in person as a technique to procrastinate is because you're scared. And that's okay. It's okay to be scared to take a giant sum of money and invest it in real estate. But you have to go through all of those things to start to get to the other end and find out when you're ready. Because if you look online, everybody's telling you to take action now. You have to take action, but you have to back up a step and realize that taking action is not buying. Taking action is taking steps each time to move forward so you get closer to having the confidence to buy. And then once you have the confidence to buy, then you're going to go through different dynamics of vetting deals, and it's going to feel a lot easier. but you need the reps. Tipping point, I always talk about it. Malcolm Gladwell, 10,000 hours. You need the reps. I've been fortunate enough to be walking houses since I was just a little child. So I don't know, thousands of houses that I've seen. You need that. You're not going to get that many because you're not old like me. But if you're new, you want to get out and get as many reps as possible. And let me explain to you in very no uncertain terms, looking at deals online and putting them into a calculator when you haven't seen them in person, those are not reps. If you're very experienced and you're vetting commercial deals or self-storage, things that are commercial assets, and where the spreadsheet, I believe, is definitely more important, still not the end all. Don't you still want to see the basement of a 126 unit apartment complex? I do before I want to plunk a couple million down to buy it. So you're missing the part of reps. I tell this story over and over. And really, one of the reasons why I'm recording this episode is because last week, at the time of this recording, I'm recording this on September 27th. It'll come out about 3 weeks later. But I spoke at a real estate investing conference, and I usually do my own meetup. Sorry, it was a meetup. And I was expecting, like 15 or 20 people. And there was like 50 or more people there. And it was 90 minutes free flow, nonstop. And that comes from my background as a trial attorney. I can just kind of wind up and go. But it was very helpful for me. I hope that I provided value for the people who were there. But I started to learn by watching people's reaction to this type of sentiment is that what they need is honesty. And what you need is honesty, because there's just a bunch of garbage out there telling you what to do when they don't really know what to do. They don't even know you. So how could they tell you to take action if you're in the middle of a divorce, bad credit, low on cash? That's not the time to take action. That's the time to back up, reassess, get your finances order, and then build the confidence to get ready to invest. Taking action for you should be building up your confidence, because once you have the confidence, buying isn't going to be a problem. You're just going to have to find the deals. And that's when you start to do the true reps, the true vetting. So why is analysis paralysis not real? Because it's a typical procrastination technique. And if you read some people, procrastination is fine because it means you're not ready to do something. But the thing with real estate investors is they convince themselves it's the numbers that aren't working, or it's a spreadsheet, or I'm staying too long in analysis. And what a lot of that means is you're just sitting at the computer too much. We all do it, but you need to get outside, go inside houses, smell them, feel them, know what a structural problem is, know what it looks like when there's a potential oil tank underground, understand what the video looks like when you're doing a sewer inspection, start to find out things that you can tell in the basement that shows, hey, maybe there's a structural issue, and then you can see it when there's floor, if you're on one side of the room and to the other side and you roll a marble and it goes down, maybe there's a structural issue. Could be settling, but maybe not. These are things you have to know. You have to know what black mold is and what regular mold is and where it comes from, and if there's ever been water in the basement and how you can tell, and how old the mechanicals are. Because the thing about it is, where do most people look at properties? Where are you looking at properties? You're probably looking online, Zillow, Redfin, wholesalers, email. And to be honest, the cool thing about wholesalers for the most part is the good ones, they all have photos of the basement. But guess who doesn't have photos of the basement? Every other property online that has a dumpy basement. You're never going to see a photo of a nice house with a crappy basement. And when you go there, you're going to be like, wow, I didn't know the basement was in this bad shape. Because that's not the residential on-market world of marketing. Wholesalers are smart when they have the most pictures ever of every crack that you can find. That's the smartest way that you can try to sell properties quicker as a wholesaler. Document every single disaster part of it, market it as if it's all there, and let somebody have full transparency on what it is. That's important. And that's what you need to see. Just think, you're going to make an offer on a house when you've been in like one basement in your life besides your own? The basement is where all the stuff goes wrong. And that's where your sunk costs are. Sometimes they're in the yard. Sometimes they're on the roof. Do you know what to look for on the roof? Are you looking for moss? You should be looking for moss, but are you looking for frayed edges and things like that? Replacements that have already been done? Are you looking for water issues on the side of the house? Listen, if there's gutter problems, there's going to be some issues on the side of the wall. And if you've ever done a home inspection as an investor, you know that grading around houses is always a problem. You're not usually going to get a credit for it, but you usually need to regrade water away from the house, especially if you don't have French drains or a sump pump in there. If you don't know what I'm talking about, you shouldn't be buying houses, because houses come with issues. And a lot of times we hear regular home buyers say, oh, well, they move in and then something goes wrong. It's, well, yeah, this is what happens with houses. They're not perfect. New builds aren't perfect. 1900 homes aren't perfect. Things come up. Things break. It's just part of the business. But if you're running those numbers in a spreadsheet and you haven't looked in the basement and you're doing per square foot costs, that is ludicrous. That does not work, and it certainly doesn't work across towns. If you know the homes that you're buying are all the same, like if your buy box is just 3-bed, 1-bath capes, all in the same area, and you kind of have done it 3, 4, 5 times, yeah, you might be able to per square foot that. Other than that, you can't. And you especially can't if you're not experienced. You can't take somebody else's formula from a book and then magnify it and put it into your project. It doesn't work like that. Because if you just on your own didn't even check out the furnace and realize it's a furnace from 1941, and you know that you have to spend $8,500 to replace that, and you didn't add that into your budget, that's a huge issue. Because what will happen is a lot of the times is you budget, say, $50,000, and then you didn't realize that. So that $8,500 is coming from somewhere. And if you're on a hard money loan, they're not giving you more money. So what you end up doing as a new house flipper or baby burr artist is you take that $8,500 out of something else cosmetic that was really going to help you, because you have to. But then you devalue your end price, and now your list price is coming down and your sale price is coming down because it looks bad. And every time that you do a flip or a burr and you don't complete it fully, those buyers are coming in and they're thinking there's more. So it's like if you do, I've been to homes that are like the first floor, fully renovated kitchen, everything's great. And then you go upstairs and it's a disaster. They still have old bathrooms. It doesn't make sense. That's like a halfie. There's no reason to do a halfie. Sometimes you can leave a basement undone, and that's okay because that gives somebody a project and you're not marketing as done. But when you see beautiful kitchen and then crappy bathrooms, it doesn't really make sense. And it doesn't make sense when somebody's renovated a house, flipped it, turned it back out, and then didn't do the bathrooms or swap out any door handles. So when we're talking about analysis paralysis, maybe this is the type of stuff that you're worried about. But I think if you're worried about this stuff or worried about making a mistake or losing money, you haven't built up the confidence to do it. I still get worried I'm going to lose money, and I almost never lost money in my life on a deal, barring economic downturns like 2008. But if you buy right and your numbers are correct, you're not going to lose money. You're not going to hit a home run every single time. That's fine. You just chalk it up to the education of real estate investing. But you can't always just sit around and say, oh, these numbers aren't working. The spreadsheets, I can't get anything to pencil. You know why? Because it's harder to pencil when interest rates are high and you don't know anything about repair costs. How do you know if it's even penciling? Who told you? How many contractors do you know? This is the dynamic that's hard for real estate investors, because maybe you listen to this podcast and you're getting like an eye-opening thing because you're used to seeing gurus tell you that, it's no problem. Here's your flipper formula. You're just going to apply it. It's going to be no problem, and you're going to bid up to get a house. Oops, that was a problem. Your ARV, was way, way too high. Your repair level was way, way too low. And that's like a lot of wholesalers. The deals that you see online, they don't really match up with the reality of what's going to happen when you're turning out a good product as somebody who's renovating houses, or you want a better product even for a burr, so you get a higher appraisal value. So analysis paralysis is something that's just all over, and it happens in other businesses. And I go back and have you re-listen to the part at the beginning where I likened it to writer's block. When somebody said that I had you don't have writer's block. You can just scribble on a page any thought that comes in your head. And if you're a real estate investor, guess what? There's homes on the market every single week. And even if you don't have a real estate agent that you trust, you can go to open houses. You can go to open houses, and now you need to sign a one-off agreement that you understand that the person there is the listing agent and does not represent you. And if they want to talk about the house, you're going to have to sign a buyer agency agreement. You can just walk through the houses, not ask any questions, and you want to walk through the dumpiest houses that are going to be on open houses. And that's a little bit of a challenge because the dumpier ones aren't usually on open house, but there are plenty of them, especially ones that are open to investors. Sometimes the agent will sit there. It's got to be in a little better shape for an agent to want to sit at an open house. But look, there's opportunities to learn about houses everywhere. They're called open houses. They're free. You can give your information or not give your information. If you're going and you don't have an agent, you're going to have to give your information. That's fair for the seller of the house to know who's going through it. But it's up to you whether you want to respond to that. So it's always better to have an agent so you can give the agent's name. And now you'd have to have a buyer agency agreement to be able to do that. And that's all in your best interest. But it has to be an investor-friendly agent who's going to help stem the tides of analysis paralysis. But when I hear people say, I've always asked the question, how many properties did you look at this week? And the answer is, I looked at 20. And I said, well, how many did you look at in real life? The answer is almost always 0. And that's scary. Because that's when you should be scared. If you're vetting 20 deals and you've never seen any of the 20 deals, I would be worried. If you're experienced and you know how to do out of state, I'd still be worried. If you don't know the area or you haven't seen the basement or you've only seen one picture of the basement and you haven't seen the corners or you haven't seen the Bilco door or you haven't seen the exterior of the home on a 360, don't you want to see every part of the exterior before you buy a home? I mean, these things are like no-brainers. What if you see the backyard and the backyard looks good, but when you're there, you know what a squishy backyard feels like? It has water issues. So anytime it rains, it's squishy. So you literally can almost never use it when it's raining. A squishy backyard is not good because when you go to sell it, everybody knows it's squishy if it rained anytime soon. You can't really hide that. So it means there's a water issue in the area, the water table's high, and likely if you're always squishy in the back, you probably have some groundwater coming into the house. Hey, it's Jonathan taking a quick break in the middle of my solo episode, which these are usually shorter. They're going to be around 30 minutes instead of our normal 45 to 55 minutes. But again, I'm asking for your feedback. Are these solo episodes valuable to you? Do you get a lot out of them to hear my process instead of just listening to me ask questions? I hope I do a good job asking questions, but sometimes, as the feedback I've gotten so far, it's nice to just get a straightforward 30 minutes on something that is relevant and current. And of course, today it's analysis paralysis. Are you with me on this? Do you understand why I think it's not real? If not, let's get to the rest of the episode and see if you do. So these are all things that you're not going to find out if you're not getting the reps. And a lot of things about, analysis paralysis are looking at numbers, not understanding where to find extra square footage that you can repurpose into something else that will increase the value. Or on the other hand, thinking that it's very easy to turn a 2-bed into a 3-bed or a 3-bed into a 4 or a 1-family into a 2-family. It's not. That's not how it works. So if you're ever increasing bedrooms, you better have a room that you really, really don't need. So I would think now more than ever would be the time to be decreasing bedrooms from 4 to 3, 5 to 4. I have a client who's we're about to do inspection on a big renovation. It has 7 beds. We're definitely going down to 6 so we can create a primary suite. Smart idea. You don't need as many bedrooms if you have the primary suite because then the parents don't have to share the bathroom with the kids, so it's easier to stay in the house longer. These are just smart ideas, but you're not going to get them if you're not getting the reps out there and looking. So how do you overcome analysis paralysis, even though it's not real? If you feel that you're stuck, how do you overcome it? And this is a really easy game plan. And I'm going to tell you, you can do this in any city in the country. Any city out of the country, hopefully, maybe it's a little bit less out of the country. But the first thing you're going to do is look for real estate meetups. You're going to look in the events section on Bigger Pockets. You're going to look on meetup.com. You're going to look anywhere. You're going to look up local RIAs. That's REIA, real estate investment associations. You're going to look those up. You're going to bookmark every single real estate investor meetup that's anywhere in a distance that you're willing to drive. And I would tell you, if you're going once a month, you can drive a pretty decent way, at least an hour. If you're going once a week, maybe you go twice a month. But if it's anywhere close and you don't have any experience, you need to get out and go to as many real estate meetups in 6 months as possible. If you can get to between 6 and 12 real estate meetups in a month, and when you go, the only thing that you do is talk to people and not try to see if somebody wants to JV with you or be your mentor, you just become a regular human being and have conversations and find out how they got where they are. Because what do people like to do? They love to talk about themselves and they love to feel heard. So if you can do that, 6 months, 6 to 12 real estate meetups, you're going to build your confidence that you'll never go back into analysis paralysis. You're going to have to do work along the way to understand what are repair costs. You need to get out and get the reps. You need to meet people who know what repair costs are. And I recommend it to somebody at this event. If you don't know how to do repair costs, when you're doing showings with your agent or you're at open houses, take pictures of things that you want to know how much it costs to replace. Just take a quick picture. You're not going to put it on social media. You're going to take it. You're going to bring it to one of your friends who's a long-term investor or a contract. You're going to ask them, hey, how much does this cost to replace? And now you're building your repair database. And that's a way you can do it when you're like a baby investor. It's no big deal. Take pictures of stuff. Take pictures of stuff around your own home. Hey, is this a furnace or a hot water heater? Don't be embarrassed. Everybody doesn't know the answer to those questions. There's still stuff in homes after literally 45 years of walking through homes that I'm like, what is that? I don't know what it is. And that still happens. So you're going to do this strategy to get out of analysis paralysis. Do the meetups, find everyone that's anywhere close to you. And within 6 months, you have to get to at least 6. You need to average 1 a month. I prefer them all to be in person. If you're making those relationships, you're not going to say, hey, can I buy you a cup of coffee so you can get a mentor? You're going to say, hey, let's meet up sometime. We can just talk some more if you're getting along with someone. Maybe they're a flipper. Maybe you can just swing by and see what they're doing one day. Everybody likes to show off their flip. Like, you're not asking anything big there, like for a mentorship or a coaching program. You're just being a human. Become a human again. And stop looking for people to help you when they have nothing to get from you. And just be a friend. See if you can be of service. See if you have anything to add value. Be interested, not interesting. That's the plan. You want people to understand that you're really interested in what they're doing. And if you're faking it, yeah, I hope you're a good fake. But you're not going to get far faking it. So that's your first step to overcome analysis paralysis, is to go to at least 6 meetups in 6 months. If you can do 12 meetups in 6 months, you're at the double speed to get closer to confidence. I can't tell you when you're going to buy your first property. I don't know how much money you have. I don't know your debt to income ratio. I don't know what your appetite is for risk. I don't know what location you live in. I don't know your funding source. So look, that's where it is. So nobody's going to tell you can just take action and you're going to go mail a couple letters and get a seller finance or sub-2 deal. It's actually absolutely silly. If you do follow some systems, you'll eventually get there, but you're not going to get anywhere. You're never going to get out of analysis paralysis if you don't have the confidence. It just doesn't work like that. If you're trying to date, you don't show up at like an event and just start talking to people that you're interested in because you don't have the confidence. You need to build up the confidence in yourself, and that does take a lot of work on yourself. In real estate investing, that's involved, but you need to get the reps on houses. You need to get the reps on talking to other investors. You need to know the lingo. You can't just toss acronyms around all day and think that it means something, because those of us who've been in it for a long time, those things didn't exist. Those are catchphrases that have been colloquialized now because they sound cool. And to be honest, they really do. But like, I wasn't growing up and my dad was saying like, hey, we're going to burr this house. No, that was a synonym for cold for me. So these things I didn't know what house hacking was, but from all the guests that I've had on the podcast, they were doing it before they knew it was called that. They were just being real estate investors. And you just need to be a real estate investor. You don't have to be a self-storage investor or a short-term rental, investor or mid-term rental or house hacker. You just want to be an avid real estate investor. And inside of that, while you're breaking your analysis paralysis, you don't want to become a spreadsheet warrior, because spreadsheet warriors always are in analysis paralysis because they spend too much time on spreadsheets. And this comes from somebody who has his whole life on a spreadsheet, but I'm not a spreadsheet warrior because I use the spreadsheets to track what I do in real life. And the spreadsheets actually motivate me to do more in real life. When you're vetting a property on a spreadsheet, you should be looking at the numbers and say like, wow, this one's pretty close. I need to go see it right now. That's a great way to do it. So if you take maybe 10 deals that are in your local area where you're looking and you throw them through whatever mechanics you want, which I don't do, but if you do, that's fine, then pick 2 to 4 that you're going to go see because those are the most likelihood. That's much more efficient. Then you're picking the best ones to go see. But just looking through and saying, hey, I looked at 20 deals and none of them pencil, it's not real. It's just not real. And it's not going to get you anywhere. You're not growing if you're listening to podcasts and reading books and then just doing calculations. You need to meet other people. The coolest thing about real estate meetups is there's always somebody that you bump into and they tell you they have like 30 units and you're like, are you serious? You look like a kid. Yeah, they know what they're doing. Those are people that you want to learn from. And you get a much, much better connection and real life feel for real estate investing by talking to other real estate investors who have nothing to sell you. When you're on social media, everybody's got something to sell you for the most part. You got a class, you got a course, and look, some of them are great. I don't have any problem with classes, courses, coaching. No problem with it at all. I just want you to be fully vetting that just like you do everything else. But it doesn't mean you can't get the reps by going through that. You have to go look at the stuff yourself. You have to take pictures and ask questions because you don't know everybody right now. So let's go to it. Step 1, 6 to 12 meetups in 6 months. If you do that, I guarantee you're going to be ready to buy. Step 2, why else are you in analysis paralysis? This one is simple. Your finances aren't in order. How can you be ready to buy if you don't even know what you can afford? If you've never gotten a pre-approval, what are you doing? How do you think you're going to buy and get out of analysis paralysis if you don't have a pre-approval that tells you how much you can afford and a lender who told you, hey, this is what you're looking at. This is your down payment. Here's the scale between the payments. This is what FHA looks like if you're trying to house hack, but that's going to be harder to win. Here's a 5% conventional option. Get your finance in order while you're doing the meetups. You've got 6 months on this plan of mine. 6 months to go to 6 to 12 meetups, 6 months to fix your credit, raise your credit, and get all of your finance in order and understand what your avenues for buying are. Are you going to house hack? Are you going to get an investment property using a conventional loan? Are you going to look at something that's maybe a short-term rental, mid-term rental, or a multifamily property that's a commercial asset? So maybe you're going to use DSCR financing. You need to have a trusted lender to go through this. In my opinion, I wouldn't be working with just a direct big conglomerate bank. They're not going to have as many programs for you. I love brokers. I think they really help in this area, but you have to build the trust just like you build the trust with your agent. So we're getting you out of analysis paralysis right now. I hope that you're writing this down or taking notes because this is the blueprint. And there's not much more to it. Because if you just do the meetups part, you're going to be pretty much all the way there. But you can't get all the way there and be ready to buy if your finances aren't in order. So those are the first 2 things. Number 3, I'm going to tell you, focus on an asset class. But listen to me when I tell you this. I want you to spend the majority of your time on one asset class. It could be single-family rentals, great, long-term. Could be short-term rentals. Maybe you're interested in multifamily. Maybe you're interested in starting with syndications. Spend those 6 months with the majority of your time learning on that until you decide that it's not for you. And if you spend 3 months and you're like, yeah, you know what, this isn't going to work for me. It's not the right asset class that I want to start with. You didn't lose because you spent 3 months on short-term rentals and now you're going to pivot to mid-term rentals or you're going to pivot to long-term rentals. You learned a lot. So you take it with you and go. But one of the other main reasons for analysis paralysis is shiny object syndrome. You know it if you have it. Oh, this week I like self-storage. Now I listen to a podcast on land flipping. I'm going to do land flipping. Wait, actually, short-term rentals sound awesome. But wait, no, actually, midterm rentals sound even better. But maybe I should just do like a long-term rental. Or maybe I should just become a flipper. But if I'm not going to be a flipper and I don't have the money, maybe I should just start with wholesaling. Do you know what I'm saying? That is shiny object syndrome. So I need you to focus. And what you're doing on your meetups, finance, and then asset class distribution, figuring out what you want to do, that's all just basically practicing minimalism. You know, you don't want to be doing maximalism and trying to fit every asset class and learn about everything. I've done that too. Sometimes I get off a podcast and I think like, damn, that sounds fun. But then I realize it doesn't fit my personality. You have to fit your personality to the asset class, and then the asset class has to financially make sense for you in your area that you want to invest, whether that's close to home, where it should be for your first investment, or farther away. And farther away, you need to figure out what works for you there. So that's really it. Analysis paralysis is not real. But if you're feeling it and you understand it and you feel like it is a real thing, I'm going to tell you, I've just given you the blueprint to get out of it. Get reps, see as many properties as possible. And you're going to do that during the 6 months that you're going to 6 to 12 meetups. And during that time, you're going to get your finances rip-roaring in order. You're going to talk to a lender. You're going to know what you can afford. You're going to talk to your partner, spouse, family, friend, anyone that you're investing with, and make sure that you're all on the same page. You're going to get all of these things in order. And then you're going to decide on the asset class that you want to focus on. And like I said, if you go a month into multifamily and decide, you know what, it's priced up in my area, it's not really going to work for me, I can't envision it, and you're going to pivot to like a 2-bedroom single family rental, great, you didn't lose anything. You did not lose anything by doing all of that research. But at one time, you can't be in all the asset classes and reading all the books. So my best advice for podcast listening, even with my own, is look for the episodes that suit the asset class that you're looking for. Or if you're brand new, you look for ones where the titles indicate that somebody might be newer. Mine are nuanced, the titles a little bit, so you can just pop into the show notes to see. But I think that's a great way. Look, this is episode 182. There's a lot of episodes. Soon we're going to have tags on the website so you can quickly ping, storage, and then all of those will come up. So this is an important way to learn. Read the books, but focus on one asset class at a time. Can you do it? I hope you can, and I hope these solo episodes have been helpful. Should be bringing them on every 10 episodes or so. And it's not because we're behind. It's because the feedback from the last solo episode on 172 about why and how I'm getting back into short-term rentals was successful. My friends are usually the ones texting me, but they give me real honest feedback. And they said it's a good break from the episodes to mix those in. And it's also a good kind of intro to what goes on in my head, which can sometimes be a little bit crazy, but is very focused. So again, this is like the meetup that I talked at. I never have notes for the podcast. I don't have notes when I'm interviewing people. I'm just a lifelong real estate investor. So what comes out of my mouth is in my head and in my experience. And I want you to be able to get to the level where you have a significant amount of experience and reps so you don't have to ever feel the pain of that supposed analysis paralysis. I'll see you next episode. Thanks for sticking around to find out who's coming up on the next episode of Zen and the Art of Real Estate Investing. Because you're not getting back-to-back solo episodes, you're welcome. You are getting an episode with the founder of Rent to Retirement, Zach Lemaster. We're going to talk a lot about turnkey real estate because that's what his company does, which is now more in the new build spectrum, but you're going to hear all about how he got started and how he came up with Rent to Retirement based on his own personal real estate investing journey. See you next episode with Zach.